The current trading session has come to a close, and we are looking at Ondas Holdings Inc., ticker symbol ONDS, finishing the day at exactly $8.75 per share. The stock experienced a downward move during the session, sliding by 27 cents, which translates to a decline of 2.99% for the day. When you see a stock like Ondas Holdings pulling back nearly 3% in a single session, the immediate knee-jerk reaction for most retail investors is to assume the momentum is fading. The expectation here is that of a classic pump-and-dump scenario, a small-cap company that rallied too hard, too fast, and is now returning to earth as the hype cycle evaporates. You look at the chart, you see the red numbers, and the natural instinct is to compare it to the safety of holding Apple stock or the established dominance of Tesla stock, thinking that perhaps this volatility is a warning sign to stay away. That is the expectation, that ONDS is just another speculative play running out of steam. But the reality is far more complex and, frankly, far more interesting. What looks like a simple pullback on the surface may actually be a consolidation phase within a much larger structural shift in how this company is valued. We are not just looking at a volatile ticker, we are looking at a company that has fundamentally altered its DNA over the last 12 months, transforming from a niche industrial wireless provider into a burgeoning defense technology powerhouse. The market is currently struggling to price in a reality where Ondas is no longer just selling radios to railroad companies, but is actively deploying autonomous interceptor drones to protect major European airports and securing contracts to monitor national borders. The disconnect between the penny stock memory of investors and the defense contractor reality of the business is where the opportunity and the tension lies. To understand why this price action of $8.75 matters, we have to look at the mechanics of who is trading this stock. Unlike the massive liquidity you see when trading Nvidia stock, where billions of dollars change hands seamlessly, Ondas is a battleground of conviction. On one side, you have the day traders using Robinhood and SoFi Active Investing, reacting to every tick and press release, chasing the momentum of the recent 700% yearly gain. These traders see a 3% drop and get nervous. They sell to protect profits. On the other hand, however, you have institutional giants. Recent filings show massive accumulation by firms like Hood River Capital and Jane Street Group, sophisticated players who do not buy purely on hype. They are buying because they see the reality we just touched on, a 600% year-over-year revenue that most of the retail market hasn't fully digested yet. If you were sitting there with your Schwab Intelligent Portfolios or managing your own Fidelity brokerage account, you know that volatility is the price of admission for growth. But specifically for ONDS, the volatility is driven by a lack of liquidity compared to the mega caps. A sell order of significant size can move the needle, creating these intraday swings that look scary but might just be noise. The volume today was significant, hovering around the 89 million mark, which tells us that interest is not dying down, it is rotating. The weak hands are leaving, fearing the top is in, while stronger hands appear to be stepping in, betting that the $11 price target set by analysts are not just optimistic, but achievable based on the backlog of orders the company is reporting. Comment below how many shares of Ondas you currently hold, or if you are waiting for a bigger dip before starting a position. It's always fascinating to see where the community entry points are. Now, let's pull back the curtain on what Ondas actually does, because this is where the expectation versus reality framework really shines. The expectation is that Ondas is a tech stock. The reality is that it's becoming a war stock and a critical infrastructure stock. The company operates through two primary units, Ondas Networks and Ondas Autonomous Systems, or OAS. Ondas Networks is the legacy business. They build proprietary wireless data networks for mission-critical industries. Think about a freight train moving across the middle of nowhere in Nebraska. That train needs to communicate with the control center constantly for safety and logistics. Standard 4G or 5G LTE often fails in these remote corridors. Ondas provides a specific software-defined radio technology that operates on a special frequency, the 700 MHz spectrum, to ensure that connection never drops. This is the .16 standard you might hear about. While this business is stable and growing, it is not the reason the stock has gone parabolic recently. The real engine of this growth, and the reason we are seeing such violent upside moves interspersed with days like today, is the Ondas Autonomous Systems Unit. This division was built through aggressive acquisitions, specifically of American Robotics and the Israeli drone company Aerobotics. This is not about selling a drone you fly with a remote control in a park. These are drones in a box. The Optimus system is a fully autonomous drone that lives in a docking station. It opens up, the drone flies out, conducts a mission, whether it's inspecting an oil pipeline or patrolling a perimeter, returns, lands, and the box swaps its battery robotically. No human pilot is required. This is the holy grail of industrial drone usage because it removes the most expensive part of the equation, the human operator. But it gets even more intense. They have moved into the counter-drone space with the Iron Drone Raider. In a world where asymmetric warfare is defined by cheap, weaponized drones attacking tanks or infrastructure, the Iron Drone Raider is designed to physically intercept and disable hostile drones. It's a hunter drone. This is why the stock is reacting to geopolitical tensions. When you read news about drone warfare in Eastern Europe or the Middle East, Ondas is no longer a bystander. They are participant in the solution. They recently announced an intent to invest up to $11 million in the Drone Fight Group in Ukraine. This is a direct line to combat-tested technology. They are not just developing tech in a lab, they are acquiring tech that is being forged in actual conflict zones. This pivot is what separates ONDS from a generic tech play you might find while scrolling through interactive brokers looking for ideas. Most companies promise they will have a product. Ondas is announcing contracts now. They secured an $8.2 million order to protect a major European airport. They won a strategic government tender for border protection involving thousands of drones. When you compare this to the vaporware often seen in the small-cap space, the reality of these signed contracts provides a floor of fundamental value that pure speculation lacks. However, we must address the financials to maintain a balanced view. The expectation from the bulls is that this revenue growth will lead to immediate profitability. The reality is scaling hardware is expensive. The company reported record Q3 revenue of $10.1 million, which is a massive 600% jump from the prior year. That's the headline number that gets people excited. But if you look closer, they are still burning cash. They have high operating expenses because they are building factories, hiring engineers, and acquiring other companies like RoboTeam and Centrix. This is classic blitz scaling. They are grabbing market share and technology assets as fast as possible to become the dominant player before the giants like Lockheed Martin or Northrop Grumman can pivot fully into this specific niche of autonomy tech. This cash burn helps explain the stock's sensitivity. Investors are constantly worried about dilution, the fear that the company will issue more shares to raise money, making existing shares worth less. We saw a dip recently when they raised capital, which is a standard reaction. But smart investors, those perhaps using Fidelity Wealth Management services or doing deep research on investing sites, know that capital raised if it is used to buy revenue-generating assets can be accretive in the long run. It's a high-risk, high-reward game. You're not buying a treasury bond here. You're buying a ticket to a potential future where automated security is the norm. Let's look at the broader sector context. The drone industry is consolidating. We are seeing a move away from hobbyist drones towards industrial and defense-grade robotics. Ondas is positioning itself as a holding company, a conglomerate of autonomous tech. By owning the air, Optimus or Raider, the ground via the RoboTeam acquisition, which makes ground robots, and the network, Ondas Networks, they are trying to offer a complete package. A government client doesn't want to buy a robot from company A and a network from company B. They want a unified solution. Ondas is building that ecosystem. This strategy is similar to how early defense primes were built, by rolling up specialized manufacturers into a single entity. For the individual investor using Robinhood Crypto or Robinhood Cash Management accounts who might be looking to diversify into equities, or someone using SoFi Invest to build a growth portfolio, the question is the run over? The stock is up massively over the last year. The technicals show a rising trend channel, meaning that despite the volatility, the higher lows are consistent. The price is currently hovering near its recent consolidation zone. If it breaks above the $11–12 resistance level, we could see another leg up as momentum traders pile in. If it breaks below support around $7.50, we might see a deeper correction as the recent profits are flushed out. There is also the regulatory angle to consider. The FAA in the United States has been slow to approve beyond visual line of sight flights, which are necessary